In this episode, we speak with Marco Ferrari and Tom Reardon, managing directors and co-heads of North America at PSG, a growth equity firm that partners with software and technology-enabled services companies to navigate transformational growth, capitalize on strategic opportunities, and build strong teams. Since its founding in 2014, PSG has backed more than 150 companies and facilitated over 520 add-on acquisitions, bringing deep expertise in software and technology and a commitment to collaborating with management teams. Marco has been with PSG since 2014 and was previously a principal at BV Investment Partners and investment partner at Siemens Venture Capital. He received an MBA and BA from Harvard. Tom has been with the firm since 2015 and was previously a general partner at WestView Capital Partners and director at CIBC Capital Partners. He received his MBA and BA from Harvard. Marco and Tom were recently recognized by GrowthCap as top software investors of 2025. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Tom and Marco, thank you so much for taking the time. Appreciate it.
Well, appreciate you having us.
Great to be here, RJ.
So Tom, I'm not sure if I mentioned this to you, but my first day as an investment banking analyst, I arrive in San Francisco, go to Robertson Stephens, and sitting on my seat is a stack of pitch books, both examples of things that have been sent out, but also, internal training materials. And there was a note from you that explained what was in these materials and kind of guiding me to getting started as an investment banking analyst. Not sure if you know that, but I still remember that. This was in the year 2000.
Well, RJ, the fact that you are still in this business and surviving is 100% on you, and definitely not because of those training materials.
They were very helpful because I was coming from a different industry. But why don't we get started? Because I've noticed something about PSG with the people I've interacted with there is that you seem to have a very unique culture, one that is very down to earth. And I've always enjoyed my interactions with PSG. So if you could just give us a little bit about, and this can go to Tom or Marco, but maybe how the team came together and, started PSG in earnest.
I mean, that's the nice thing about PSG is that we've all known each other for a long time, and a lot of us have worked together for a long time. So we have those relationships and that level of trust that goes way back. As an example, Tom and I went to college together. So we've known each other since we were 18. We went to business school together. We were actually in the same study group in business school. So we always talked about trying to find a way to work together. And so when Mark Hastings, who we both knew from the Boston tech scene and, who Tom worked for after business school, approached us with this idea to start something new, with people we knew, respected, trusted. It was, for both of us, it was a total no-brainer.
Yeah, I mean, one of the things, RJ, I mean, the Robertson call out is a great one because I think Robertson in a lot of ways was like that, right? Robertson had a bunch of amazing people. And while unfortunately it was a casualty of the dot-com boom or explosion, the number of people you see that came out of that institution that were highly successful and still to this day stay networked is incredible. I mean, Marco referenced it, but Mark, our CEO, and Peter, our chairman, were also college roommates. And so they were always looking for that. And so the nice thing about what we had when we started was never jockeying for position or who's going to establish what and where am I going to make my mark. It's let's just focus on the core attribute of what will make us successful, which is find good companies, figure out how to make them successful, help them grow, and that will benefit all of us. And so just having that clear mandate and just not the background noise of establishing credibility was awesome. And we've tried to continue to hold that and have it be prevalent throughout the group. And I think we've managed to do that as we've scaled.
We, as you know, actively track the growth investment industry in various firms. PSG has scaled, I think, fairly rapidly and successfully compared to maybe others in the market. And I'm curious why you think you've been able to do that. I mean, maybe accelerate the scaling. What makes PSG different? And then we can lean into, maybe the investment strategy here.
When we started PSG, it was always around finding interesting growth software opportunities in the lower end of the middle market. We saw that as the biggest opportunity, the largest number of companies, from our perspective, the best risk reward. And that was always our strategy. It's like, that's where we want to play. And we built a firm in an organization to support doing those types of investments at scale. And so over the years, as we had some success, as we grew, the deals remained the same. So if I look at a deal that we're looking at or that we completed in Fund 6, which was a $6 billion pool of capital, and compare that to a deal in Fund 1, it's going to look very similar from a size, from a characteristic standpoint. Most firms, I think, as they have success, they raise bigger funds, they do bigger deals, and then you have to change your strategy. And so we just chose a different strategy to say, like, this is what we're good at. Let's build a firm. Let's build resources to support that. It takes a lot of resources. So we had to build a much bigger organization. We have a really big deal team. We have an operations team of over 50 people. We have a massive sourcing team. We have senior advisors. So we've surrounded this whole strategy with a lot of resources, but that's what it takes to stay dedicated and committed to that type of strategy.
If you boil it down, it comes down to being comfortable with what we know and really doubling down on that. And in these instances where we don't, let's not do that. So part of that's going up into the big buyout world and doing bigger and bigger deals. That's not where we came from. That's not our background. That's not our core capabilities. It really is knowing the lower mid-market. And so the build out of the resources we had was around providing the founders and managers of our investments the knowledge base that we may not have as pure investors. So when you sit down with a founder who's trying to figure out, how do I properly incent my sales force to change behavior? Well, we can talk about that theoretically as investors, right? But when you're actually having to sit down with each individual sales rep and have a conversation where you're impacting their compensation and you want them to change behavior, that's a nuanced thing that, candidly, as an investor, I've never had those conversations. So let's have a subject matter expert residing in our ops group who can come down, coach that CEO on, here are the ways you can implement this program in an effective manner and not disrupt the whole engine, that's much more tactical than we have at that high level. And so that's an example of just as we've gone in, we're going to have as many resources as possible for this end of the market so we can really help them get to that scale.
And, as you were embarking on your latest fund, and it's a sizable fund, did you think, well, we could effectively deploy this capital in the right amount of time and provide the right amount of resources with our operations folks and seek the outcomes that we're aiming for? Did it seem fairly obvious that you could do that at this scale?
Yeah. I mean, we've looked very closely at all our staffing models, at all of our resources, and we've always hired ahead of that demand. So when we thought about raising Fund 6 and that pool of capital, we knew we had the right level of resources to support that size fund. And the other thing is, we've been in this perpetual cycle of fundraising since 2014 when we started the firm, and we wanted to give ourselves a little bit more time between fundraisers to deploy that capital. So we're not looking to do anything different from a deployment pace, from a number of companies. It's just we wanted to give ourselves a little bit more time to deploy that Fund 6.
The other part of that, RJ, is really being in our end of the market. I think if I were looking at doing bigger deals at scale, those are becoming more scarce, and certainly in this environment right now. And so deploying dollars in big chunks, I think if that was the strategy, I'd be a little bit more concerned about it. But if you just think about the sheer pyramid of small businesses going up to the enterprise, there constantly is an iteration of small software companies that are being created and that we're tracking. I think you've probably heard other of our colleagues refer to our optics platform, which is our in-house sourcing software that we've built and AI enabled and all the bells and whistles. But the best part of that is it's been around for 7-8 years and really has the benefit of all the conversations and tracking that we've had. But if you look at the companies added over each year over year, there's a 50% increase in the number of names that were added in the last 12 months relative to the months prior. So the opportunities continue to bubble up that we're tracking and looking at. And so from our perspective, being in this end of the market, we looked at those, as Marco said, very closely, and there's a ton of opportunity there.
And, when you think about how you grow each of your portfolio companies, and I suppose there's a mix of this, how much of it is growth through acquisition versus deploying your operations teams into the situations to help them scale organically?
It's both, as you mentioned. For organic growth investors to start, so we always underwrite our investments that they have to work on a pure organic basis. And so that's always the way we think about things. Like, if we don't do one acquisition, is this still a good platform? Can you build a good company here that drives a good return? We've been very active, as you know, on the M&A side. We've completed over 550 acquisitions over the 120 plus platforms that we've invested in. So M&A has been a really big part of our strategy, but it's not one size fits all. Every deal is different, unique. Some we do a lot of M&A. We're trying to consolidate a market quickly. Others are pure organic growth stories. It really just depends. I'd say even more recent, a lot of the M&A we're doing is acquiring native AI talent and native AI product as a way to enhance our existing software platforms. And so, traditionally we've been looking at expanding TAM, adding customers, people, and doing it in a creative way. We continue to do that, but we're absolutely, I'd say the last few ICs we've done have been all around native AI acquisition candidates into our existing portfolio.
Yeah.
On the operations front, you do also have a good number of folks specific expertise, as you were referencing earlier. Is there kind of a good example you could provide where maybe there was something unique that, one of your operations team's members was able to kind of uncover and really help a company scale?
I might take that in a different avenue, in that what we've done with the operations team is to make sure that our capabilities in that group match the needs of the portfolio. So for instance, 4 years ago, we had several UI, UX engineers that were helping on user interface. That emphasis over the course of the last several years is not as critical as having an understanding of where AI is going to impact your core product, as well as how you can leverage it to run your business more efficiently. We had no AI capabilities within our ops group 4 years ago. So now, as we've come forward, we've shifted those resources. And again, it's all been sort of reactive to the market. And so we have a couple of full-time AI scientists who now are probably the busiest people in the firm as they sit down with all these companies. So that's an example of just what we tried to do is match capabilities with demand. And that shifted over time. There's some core steady areas in finance, go-to-market, talent, which all are vital and continue to be. But, the things around product, around engineering, et cetera, those have been where we've tweaked and made sure that we're matched up appropriately with the demand in the portfolio.
The biggest topic these days, as we're all talking about, is AI, and that's pretty obvious, and it's everyone's buzzword. Being a software investor and maybe having been a business software investor without the overlay of AI in the early days, How do you look at the market today, in terms of, okay, you have your existing portfolio companies that maybe it's all on a spectrum, like some are more traditional, some are baking in the AI, and then you're going out and continuing to build your portfolio. Are you looking at now just pure play or native AI? Do you still look at the software companies as maybe building a new platform?
We've always been very flexible in terms of what we're looking at and making sure that we're not just sort of dogmatic about this is the type of deal we're doing and we're not going to look left or right. Because obviously over the years, there have been plenty of firms that have been solely focused on one type of investing and that just goes away. And so when we started PSG, we were very heavily involved in vertical software payments, but we always had an open aperture to the left and to the right of that. And that continues with AI. We've done a lot of native AI investing, native AI platforms. We continue to look at existing software companies that are providing, we always look for product market fit as a starting point. And if you're going to go down that path of traditional software at this point, you just have to make sure that you have, from a product perspective, from a market, from a competitive perspective, that you've done your work and you understand what is out there and how that piece of technology will evolve and what the threats around that are. And so we're doubling down, as Tom mentioned, and even tripling down on product, on AI, from a operations, from a diligence, from a just an overall understanding, because we do view that as a fundamental shift, just like cloud, just like mobile, that will impact everything. And we are heavily involved both in our existing portfolio and in new investments, and making sure that we're very aware and on top of what's happening.
I think that last point Marcos made is probably one of the more fundamental ones that we have, right? Which is AI is in itself an amazing investment opportunity, but it really is, it's a technology shift that's going to actually drive more software adoption, not less. And so it's similar to the cloud. Everybody wasn't sure, how is that going to affect everything, mobile, et cetera. This is just another accelerant that is going to drive technology adoption. Ton of opportunity there. But if you need to understand the business problem, in a lot of the vertical software, for instance, that we do, there's a pain point that somebody that spent time in that industry had. And so they came up with an idea, here's how we're going to solve that pain point. And so as they build their software product, that has been the driving focus. How can you now leverage AI to accelerate the solutions or the solving of that pain point? So what you have with the incumbent software provider is the identification of the problem in the history, the interaction with the customers, the data, et cetera. When you take a step back and think about where AI is going and how the world is evolving, OpenAI with ChatGPT and how the big models are going to consume everything, the big models don't solve all the problems uniformly and completely. And so there's a real opportunity. You take what Salesforce announced within the last week of how Agentforce really isn't taking off. They thought it was going to be the poster child for widespread AI adoption, and the product's not being used anywhere because the models can't solve everything specifically to those end use cases. So when you have smaller models that are introduced into these specific areas with the data and experience of these incumbents, you can create something very powerful and potentially more effective than some of these large general models. It's not universally applicable, but that's something we spend a lot of time on looking at, where there's a real opportunity to leverage incumbent positions by introducing that AI. Now, getting that all right is an exercise in and of itself that takes time, but there's got to be a sense of urgency on pushing it. So if you were at our CEO conference back in June, you would have seen the emphasis on this in that sort of, hey, we got to get moving, because eventually people are going to catch up, but there is an opportunity to capitalize on these moments where there's real value to be created. And so that's really a big thrust of how we see AI playing out.
Both of you have risen to this kind of co-head level. And again, as we mentioned earlier, PSG has grown quickly and successfully. There's many firms that, kind of struggle to grow, or maybe they specifically choose to stay at a certain level. But nonetheless, the two of you need to have certain leadership skills to build this firm, obviously along with Mark. But tell us about your maybe certain leadership philosophies, things you think about daily to help guide yourself to be a good leader day in, day out.
That's a really good question, RJ. You got one, Marco?
I was going to say so much of it is around communication, number one. Tom and I have been at PSG for a long time. We've spent a lot of time on the deal side of things. We have a lot of things go well and a lot of things that have gone okay. And so having that open communication, encouraging open dialogue, knowing that it's a really hard business. We're going to make mistakes. That's okay. Let's learn from our mistakes. Let's not make the same mistake again. And just having that sort of attitude throughout the firm that, look, we're in this together. A lot of us have come from team sports where, it's just a broader effort than just one or two people at the firm who are high performers. We want to elevate everyone. And I think a lot of that comes from just being open about what it takes to win and how to react when things aren't going well. And do you point fingers, or do you really get everyone together and say, okay, this is how we can do things better?
Mm-hmm. Yeah, I think we have a saying that I believe it was Mark Hastings who coined it originally, but there's no good news or bad news. There's just information. But all that information has to flow quickly. And so I think we've always, starting with that sort of foundation of our ability to be comfortable with one another, and we're not trying to prove anything or position, it really came down to, let's just make sure everybody's on the same page all the time. Now, as we've scaled, we've had to be very deliberate in that. And I think it's certainly something that we constantly revisit and iterate on. But I think the other thing is, in a world where people have gone back and forth, out of the office, in the office, one of the things we've tried to do is just remain present and communicative with one another. And I always go back again, you got me with all the Robertson Stevens thoughts going. But when, Mike McCaffrey, who was the CEO at the time, was there, and he's another team sports guy, right? He was a swimmer from Princeton. His door was always open. And as a first year analyst, I remember walking by, see the office open, walk in. I'm like, hey, Mike, how are you? And he'd sit down and talk to you for 15 minutes. And I think being able to have that ability, and both of us believe in that, we're all in this together, right? And the benefit of starting early, we had a lot of fun. We made a bunch of mistakes. We have a bunch of old stories that people like to hear. And some of us may tell longer stories than others. But at the end of the day, we're still having fun doing this. And I think it's a hard job. It's very stressful. We ask a lot of our team. And so making sure that everybody understands there is an enjoyable aspect of this, we're lucky to be doing it, and sort of have that continue to permeate through the organization. That's been a critical part of the scaling.
We're entering the tail end of the conversation. I have two final questions. One is, can you tell us about a person who's had a profound influence on you?
For me, that's always been my dad. He came over from Italy as a teenager, very little education, built up himself, his family, through hard work, through determination. And he's a builder and a mason, and he made my brother and me work with him every summer. And so he showed us the value and the importance of hard work, and that stuck with me forever. He said, I don't want you to work with your hands the way that I worked with my hands my whole life, but I want you to know what it's like, and I want you to understand the value of hard work. And that's just shaped me. And so that's an easy one for me.
And still in his late 80s, he continues to work with his hands, probably more so than his son as well. I can't top that. I mean, I'd choose Marco's dad, honestly, as well. But I guess I'd go back maybe there's a guy I worked for when I was first out of school. Prior to going to Robertson, I worked down in Washington. I did a thing called Advance, where you work for the administration, walk the president through events, plan them, go on to the next one. It's basically glorified event planning. But the beauty of doing that when you're 22 is it's very unstructured. You have to think on your feet. You have to react to a lot of things in real time. And I had this savvy veteran guy by the name of Nick Friendly who worked with me and was in charge of it all. And he had two rules. One was odd and one was very poignant. The odd one was no whistling. It just drove him nuts, and I don't know why. But the second was don't run. And again, we're in an environment where you are in these urgent matters and have to react, but don't run. People see you running. That incites panic, that incites all sorts of questions and insight. Just take it and walk deliberately, go, but don't run. And I think that has always been a good leveling piece of advice that stuck with me to the point where I haven't talked to Nick in probably 30 years, but it's something that always resonates.
Last question. Can you tell us about a charity cause or other endeavor that you're passionate about?
Yeah, for me, it's the Glenn Doherty Memorial Foundation. Glenn Doherty was I live in Winchester, Mass. He was a hometown Navy SEAL who fought hard for his country, ultimately died while protecting the U.S. Embassy in Benghazi. And he had a hard time transitioning from military life to civilian life. And so when he died, they set up this foundation, which essentially helps bridge that gap and helps mostly special ops forces, soldiers in their transition to civilian life by providing scholarships for higher ed and anything they need to sort of make that transition much easier. And so that's a cause that both my wife and I are involved with and big believers in.
It's one that we support at PSG because it's an amazing one. I think for me, and might be just a good way to emphasize one of the ways we've tried to keep the culture going here, is less sort of a specific set of charities, but more a specific event that we hold, which we call our giving event. And so as it relates to our holiday party at year end, the morning before, we have a firm-wide globally, so in London, Israel, here, bring everybody together. And what we have done is 2 weeks prior, we've asked for submissions from anybody in the firm. Can be CEO down to analyst to admin to IT support, whomever. And we asked for them to submit a one-page document in advocacy of a charity. Each submission gets a nominal dollar amount, so it encourages submissions, and we get anywhere between 40 and 60. And then we whittle that down through a panel that covers the whole team down to a group of 10. And then those 10 individuals or groups of people, and it usually is folks team up to do this, on that giving day before the holiday, we have a 2-hour-long presentation where everybody gives a 5-minute pitch to the entire firm on the charity of choice. And each one is a unique story and there's unique backgrounds. And I think it really is a tremendous testament to the folks who work with us, who care deeply about a lot of really interesting and diverse set of subjects. And so from there, live on that, we then vote as a firm. There's no trumping votes or anything, and everybody gets it, the top 10. And so each one gets an incrementally larger dollar amount, but the winner, I forget, what was it, Marco? It's like 50 grand or something like that. Might even be more that goes to the winner. And the great thing is, if you look at the past few years, it's always been the associates. Like, it's the youngest people that have the best pitches. I mean, there have been a couple where people are just, the whole firm's crying. But it's a fun, thoughtful, moving event for us that ends up being the highlight of the year.
Just to be clear, the money goes to the charities, not to the people.
Not.
Good point. Forgot to mention that.
Yeah.
That's why we work well together. We pick each other up on occasion.
Well, it truly sounds like a wonderful way to bring everyone together for good causes. Tom and Marco, thank you again for taking the time. It's been a great conversation.
Thank you for it. Appreciate it.
Thank you, RJ.